Hi everybody, and welcome to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. Well, I did not expect to be saying this quite so soon, although I warned that something like this was going to be happening, but Nvidia is breaking strong support as I speak, and therefore one of the critical AI stocks may be signaling that all is not entirely hunky-dory in AI land. I would not take this as a general warning to take to the lifeboats as far as the NASDAQ 100 index is concerned, as the index itself does remain safely above its own bubble price, that's 7.4 times book. But maybe we are being warned. TBA. By the way, the TSX, with its strong weighting and energy, is holding well and is but a hop, step, and jump away from breaking up and out. Again, TBA. By the way, Nvidia is not the only one of the FANGs which look a mite on the peaked side, as we will see in a moment. But before we take a close look at those FANGs and what's been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, let's start off with Amazon. And Amazon, of course, had broken out over its bubble price and is holding in very nicely, and indeed sort of getting some encouragement there from its earnings forecast and therefore its fair market value. It looks very much to me as if the HB1 is a likely target. The same I can say, by the way, for Alphabet, which has broken out over its MSG price. That's 5.5 times book value, and actually has one of the strongest fair market value potentials of all of the FANGs. Its downside risk is only 20%. I will say, in taking a long look at Alphabet, which here you are, going all the way back to the start, you can see that the bubble price would be a reasonable target. If it gets there, however, it would be the highest valuation that it had ever got since its initial days as a listed stock. Now Nvidia, and Nvidia had been nicely constrained within that channel HB6 to HB7, that's 33 to 43 times book value, but today has broken down sharply. Now, one day, of course, does not make a confirmed breakdown, but it had been sitting there really unable to gain the kind of upside traction that I would have thought that the stock might have gained. So I am issuing a warning. Apple, well, Apple has broken down below its HB6. It had already gone up to its HB7, hit there and stopped and set back one breakpoint, but is now failing at a second breakpoint. The news out of Apple is not particularly good, and sales have slowed to basically to a crawl. Netflix had rather surprisingly, from my point of view, had actually broken out above its bubble price. I did not think that it would do it, but having done so, it now looks as if it's in a strange place and feels that it doesn't belong. It's been sort of, after that little breakout, it's been sort of back and forth very recently, and it had a very, very, very sharp setback yesterday, and it's weak again today as well. It is a stock which I don't care for, and I am concerned now that it may be the beginning of a further setback. Meta, the same thing. We've already got a confirmed breakdown of Meta below its mid-super growth price. That is 5.5 times book. I must say that I feel a little disappointed because I had thought that there was a good shot at the stock rising to its bubble price, which would have been its very, very long-term peak, on promises from Zuckerberg about focusing on profitability. That is slowing down, picked up a little bit recently. Let's see what happens here. But so far, as I say, I have a confirmed breakdown which has not been rescinded. Microsoft remains nicely within that channel, the HB1 to its HB2, which is 9.5 to 12 times book value. However, it has been unable to get past its HB2 price again, 12 times book value. And myself, I keep wondering if it wants to set back to its HB1, and perhaps with this warning from the semiconductor industry, perhaps there is more downside here. We shall see. Finally, Tesla. Well, Tesla has been moving up to its HB3 and has actually broken out where it is right now today. And I have to wonder. Let's take a look at the pattern of Tesla here. Okay, the stock bottomed at its bubble price, up to breakpoints and about a half A, and then a setback of one breakpoint, up to and about a half, and a setback of one breakpoint. Now, is this pattern about to repeat because it's breaking out over its HB3 price again? And certainly Tesla appears to be taking a very commanding lead and presence in the electric vehicle industry. Now, to summarize what's happened, I think as long as you don't think too much about it, Amazon looks to be just fine, thank you, fine. It is broken out over its bubble price, 7.4 times book, and the trend to its fair market value measure has tilted up nicely. All you have to do is ignore its slowing sales growth and the reality that it is sitting 62% above its fair market value measure. Whatever. The shares have been moving from strength to strength lately, and FANG investors may well be happy to be in something that is not controversial, or at least not particularly so. In comparison, Alphabet is a steal. It has a much stronger balance sheet than Amazon, is trading just above its mid-super growth price, which is 5.5 times book, and is valued at a mere 20% above its own fair market value. At the moment, however, it is embroiled in a discussion with the U.S. Department of Justice, in which the Department of Justice alleges that Google illegally stifles competition by spending more than $10 billion a year to stay the default search engine, as the U.S. and a phalanx of state attorney generals are alleging. So far, however, investors are overlooking these allegations. And frankly, why not? Personally, I don't see any search engine that's any better. Now, let's take a look at a potential switch here from Nvidia to Tesla. Nvidia is breaking down on news of a potential industry slowdown warning, courtesy of Taiwan Semiconductor, while Tesla seems to be going from strength to strength in the electrical vehicle industry, and picking up some AI luster as well. Nvidia is trading at its very long-term valuation high after trying for even more, unsuccessfully it now seems, whereas Tesla has been much higher in valuation terms. Netflix looks to be coming unglued here with some extreme recent volatility. This has been a stock which I have been very leery about ever since it broke out above its bubble price, 7.4 times book, and my worst fears may be emerging. Again, TBA, as the stock has been crossing and recrossing that key valuation level. Apple had set back one breakpoint, rallied, but has now failed to hold at its HB6 33 times book value price. And I suspect lower prices ahead. The recent Apple decline was on reports that China plans to expand a ban on iPhone use to its state-backed agencies and companies, with more bad news coming in the way of a warning from U.S. regulators about being overly restrictive in access to payment apps, a shot at its tap-to-pay technology. Overall, Apple sales have slowed to minuscule growth levels. Any positive growth now supported largely by growth in services. To remind you, as Fred Hickey of High Tech Strategist notably observed, high-tech companies that now have to rely on services are coming to the end of their growth era. I have to tell you that supporters of the stock, however, are becoming almost frantic, with frenzied buy recommendations whizzing by me several times a day, it now seems. Meta has very recently given us a confirmed sell signal by failing to hold at its mid-super growth price, 5.5 times book, despite the current and apparent increasing fair market value trend. I remain disappointed that the shares did not reach my bubble price target, but I don't argue with the market, so I will take that as read. That leaves me with Microsoft, with its management sounding the caution horn. Retreat to its HB1 price seems in order, although that strong balance sheet growth is attractive. In closing, remember what Jerome Powell said at Jackson Hole, that the U.S. Federal Reserve Board is navigating by stars under cloudy skies, and just don't get too complacent. However, I will leave you with the cheerful thought that the U.S. markets, that is to say the Standard & Poor's 500 and the NASDAQ 100, are holding in. So contain any feeling of panic that you may have due to the potential Nvidia breakdown. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.